Hi, oh, Keith is coming on. So I'm just going to, the strategy that we utilize for studying is going through the questions. Actually, I need to hurry up and get through this because I forgot we're on chapter 4 and we want to get to the end of it. But as I'm going through this, how are you doing, Keith? Can you hear us now?
Yeah, I'm doing well. I can hear you.
Good, good. So we have the strategy that I encourage. Okay, let's see. So we actually have to answer these questions. I'm trying to get to the quiz at the end of the chapter. Keith, have you joined us before?
No, this is my first time.
Okay, awesome, awesome. So what we're doing is we're going over we're encouraging. Well, we're getting people to the point where they'll be able to pass the life insurance exam. So right now we're on chapter 4. When we get to the last chapter, we're going to just start right back over again. So don't worry about missing anything. But I am going to put in the chat where you can go down and get the training for this. Let me also just take Keith. What is your phone number, Keith?
My phone number is 571-244-1223.
All right, so let's see. We're going to run through these questions quickly because we went over them yesterday. But a grace period in a life insurance policy is typically 31 days and provides for the payment of the premium to be received after its due date without a penalty or lapse. That sounds right to me. And we are going to do this quickly because ultimately what we really want to get to is the end of the chapter. And then those are the questions we want to go through.
You're not sharing.
Oh, I'm not sharing again. Thank you. What is the primary advantage to the policy owner in the reinstatement of a policy? All policy owners, the policy owner needs to enjoy the benefits. So the primary advantage of the policy owner in the restatement of a life insurance policy is the owner continues to enjoy the benefits that were provided in the original policy, including the original premium. Match the policy provisions with the correct description. Mode of premium payment. Frequency of premium payments. 2-year death, suicide clause. If anyone's curious, after 2 years, typically, and it's not really something you want to know, but after 2 years, they do pay life insurance claims, even in this case of suicide. The grace period is the time period after which premiums due date before the policy lapses. Reinstatement is if the policy lapses, you can bring it back. The consideration clause. Oh yeah, consideration clause is in exchange for payment. Anytime you hear consideration in life insurance, it's dealing with payments. And then the insuring clause is the provision identifies the parties' perils and promises of the contract. Match the policy provisions with the correct description. The entire contract is dealing with application and everything else involved. Insured may return policy for free refund, free look. Benefits will be adjusted according to what premiums paid would have purchased at the correct age, the misstatement of age. Insurer cannot contest incontestability. So even if somebody lies on the application after 2 years, there's nothing the life insurance company can do. And then assignment is transferring ownership. Policy loan provisions include all the following except interest is charged annually. The death benefit of a policy is automatically reduced. This is the one that's not true. So this is something just real quick. If you take out a loan, it does not reduce the death benefit. It reduces the cash value. So that's something to just keep in mind. Also, let me just quickly say, Keith, the focus that we have is to teach generational wealth creation. Are you involved with FEG already, or did you find this through me somewhere?
I just found through you today. I just happened to drop, just clicking on fall into your airdrop, and then I saw this just now on my text message, so I just joined in.
Awesome, awesome. Let's definitely talk either after this or tomorrow, and I'll give you sort of a broader picture. You're sort of getting thrown in the midst of something right now, but just sort of, listen, pay attention if you've got to run off, whatever. But, just understand this is a real opportunity for people I'm looking for 100,000 blacks to make 100,000 income. And we can do it. We can really do it.
I believe you.
I found after being a wealth manager for 15 years, when I start talking about generational wealth creation, people are a lot more interested than just talking about life insurance. Took me a little while to catch on, but so a contingent beneficiary has the right to prevent, note, receive the policy proceeds of the primary beneficiary predeceases the insured. That's the right one. Policy owner wishes to maintain all rights in the policy should designate a no. Wishes to maintain all rights in the policy should designate a primary. Wait, a policy owner who wishes to maintain. Oh, right. A revocable beneficiary. Thank you, Anna. Was that you who said it, or Sunshine?
That was me.
Okay, that's what I thought. Just went back on mute so fast. Interest only. If life income with period, certain lump sum, and life income only are all forms of which of these life insurance? These are settlement options. So in other words, at the end, yeah.
How often is this class?
Monday, Tuesday, and Thursday. And we're going to just keep going it, cycling through. When we get to the end of the chapters, we're going to probably pick another state. Right now we're studying Georgia, but we're just going to keep going. Try to do it within 4 weeks. So I'm going to try to start on the first Monday of every month. So if you start in chapter 4 now, then you only need to go to the first maybe 3 or 4 days when we start it over again.
Okay.
What do you currently do for work?
I'm a data center technician.
Okay. Could you use an extra $100,000 this year?
Absolutely.
Yeah, well, I love what I do, because, it's about service to me, and it's about helping people, and it's about making a difference in people's lives. And, anyway, we can talk about Anoket and her husband later, but they have been with us since we started building out this, this part of really building out my own, company, I guess you would say. Yeah. Before that, I was always with others. But it's I love it. I love it. me personally. Dividend options do not include which of the following choices: a refund in cash, paid up additional insurance, reduced premiums due, lifetime income. I'm trying to get to the end here. Oh boy, they really want us to. So a fixed amount. Paid up additions, extended term, non-forfeit, fixed period, settlement, joint life, reduced paid up, life income, joint and survivor. We'll go through all of what these things are when we get to this chapter again. Premium reduction, must be that. Life income only, paid up option. Accumulate with interest, life income period certain, cash surrender, interest only. Wait. Which one is this? Do you guys know? Interest on the first one? Oh yeah. Man, oof. All right, now we're here. All right. So we need to get an 80% to pass. So let's see. So now we're actually going to read these questions carefully. And the strategy that we utilize here is read the question, guess the answer as best we can, and then if we get it wrong, read the question again and then read the right answer. So Keith, I'm gonna let you play along with this. Anuket has been studying very, very hard, and Patricia's already licensed. So I'm gonna let you guess, and I'm gonna hope that we get some of these wrong. And because then that's part of the practice of how to study for this exam. So Z elects the life refund settlement option. So a life refund settlement option for a $250,000 death benefit. Z lives long enough to recover $150,000 of the $250,000 death benefit. How much does his beneficiary receive?
A.
So, A, I think so too. Settlement option. Let's see. Look at that. You're ready for the exam. You understand the concept already. With life refund, payments are made for the lifetime of the recipient. Upon death, if a recipient has not received an amount equal to the total death benefit, the balance is refunded to the beneficiary, either in a lump sum cash refund or in installment refund. So if you get it right, then go read the correct answer. The non-forfeiture option that provides protection equal to the policy's face amount for a specified number of years and days is extended term, cash surrender, reduced paid up, or paid up additions. Do you have a guess there, or Sunshine or Enoket, do you have a guess, or do you know? I think I know what it is. I think it's, what do you think?
I was just looking at the question again, the non-forfeiture. Read it again. I'm looking at.
So the non-forfeiture option that provides protection equal to the policy's face amount for a specified number of years and days is, I think it's C, reduced. Wait.
Oh, I don't know.
I think it's extended term. See, now I think it's either A or C. So now we guess, and we hope we guess right. So what do you say? What does someone yell out? A or C, you think? I think maybe A, because it's going to be equal to the current face amount. I think reduced paid up reduces the face amount. So that's where my logic is going. All right. With extended term, the present cash value is used to buy a single premium term policy of the same face amount for as long a period as it will buy, expressed in a combination of years and days. This option is sometimes referred to as the automatic or default option if no other option has been selected. This option in the policy will expire prior to age 100. Albert owned a $100,000 policy that accumulated a cash value of $20,000, against which he had borrowed $10,000. If he dies with this loan outstanding, his beneficiary will receive which of the following amounts? $80,000, $120,000, $110,000, or $90,000. So that means he still owes $10,000. So he borrowed $10,000 and the death benefit is $100,000. Which of these options do you think it is, Keith? D, 90,000. Let's see. That's right. Any outstanding loans at the insured's death will be reduced from the face amount, death benefit, along with any interest due. You're a good test taker, aren't you, Keith? Like
sometimes.
Sometimes, okay. Which provision allows an insurer? So now we always have to slow down and say, okay, the insurer is the insurance company and the insured is the client. So let's not get confused. I'm just saying it because I do. Which provision allows an insurer to borrow from the cash value of a policy in order to pay premiums due and prevent a lapse in coverage? Borrow cash from the policy in order to pay premiums due. Partial withdrawal, reinstatement, spendthrift, automatic premium loan. You have a guess on that one, Keith? So a provision which allows an insurer to borrow, keyword, from the cash value of a policy in order to pay premiums due and prevent a lapse. So now we have automatic.
Loan, D.
Yep. It's automatic, which means that the insurer can do it. Premium, it's paying premiums, and then it's going to create a loan, and that's how it's going to pay. So that's exactly right. The automatic premium loan provision enables the insurer to borrow automatically from the policy's cash value at the end of the grace period to cover a premium payment to prevent the policy from lapsing. The non-forfeiture option that, if exercised, terminates all coverage is reduced paid up, cash surrender, extended term, or paid up additions. Any guesses there? So that terminates, which word sounds most like terminates in these four?
Cash surrender.
There it is, exactly right. Upon surrendering the policy back to the insurer, the policy owner will receive the cash surrender value stated in the policy less any outstanding loans and accrued interest. The insured no longer has insurance coverage if this option is selected. All of the following must be included in a whole life policy except guaranteed dividend table, surrender value, cash value accumulation, and extended term provision. So this is, I'll just tell you this, dividends are never, ever, ever guaranteed. So when they say it must be included and they mention dividends, then we know that that has to be the odd man out. Now they're going to oftentimes throw questions at us and they're going to say all of the following must be included except. Make sure you read this question twice and know whether you're looking for the things that are true or the things that are not true. So we want to say guaranteed dividend table, and dividends represent a refund of unused premiums when mutual insurers have a surplus profit. Dividends are not guaranteed. Cash value accumulates as the policy owner pays premiums over the years. The cash surrender value must be stated in the contract if the owner wishes to cancel the policy. An extended term is a non-forfeiture option that must be offered. Blank is are not considered material to the policy issuance. Hazardous occupations and or hobbies, That doesn't sound true. Age and or gender. That doesn't sound true. Recent major inpatient hospital surgeries. That doesn't sound true. 12 driving under the influence tickets within 6 months prior to application. Okay, wait a second. Blank is or not considered material to the policy issuance.
D.
Yeah, that's what I would say too.
Are not considered material.
The policy insurance.
Age or gender. Okay. Is not considered material. So there's some thing that their material has some meaning. Let's see what they mean by that. Material to a life. Material misrepresentations or any false statements, whether into, okay, it's a trick question. So material misrepresentations are false statements. What this age or gender is covered by another thing. It's covered by the misstatement of age. So this was a trick question that we needed to know that this was something different than material. So just know that the age or gender is covered under something called misstatement of age. But these other things, if someone has a hazardous occupation, if someone has recent inpatient hospitals, or if someone has 12 driving under the influence tickets within 6 months, they will almost certainly be either rated or declined life insurance. Age or gender is not going to be material to the policy. So that's the key word, material. That's something that I would make. If I would write a little note on that, and I would go back and read the chapter that talks about that, so that I could get a better understanding of what material is. Once issued, if the application is attached to the policy itself, it then becomes part of the incontestability clause, consideration clause, entire contract, or the insuring clause. Any guess there, Keith?
I'm sorry, I was writing a note about that last question.
No, okay. Once issued, if the application is attached to the policy itself, it then becomes part of the blank. Incontestability clause, that doesn't really sound right. Consideration clause, maybe, but doesn't 100% sound right. Entire contract, maybe. See, you're 100% right. The entire contract is the application and the policy and the riders. It's basically everything put together. It is the entire contract. To be regarded a part of the contract, the application for the insurance must be included with the rest of the policy. It may not be incorporated, quote, by reference. So you can't say, okay, refer to this other page somewhere else. You've got to have it all there together. What is the primary purpose of the free look period? It forces producers to deliver policies in person to resell the policy, reduce returns, and early policy lapses. Doesn't sound right. It's a way to offer a legal rebate, 10 to 30 days of free insurance. That doesn't sound right. It is a marketing strategy of major insurers to get applicants to sign up for a policy. That doesn't sound right. To allow the applicant time to reconsider their purchase decision and see if the policy was issued as applied for. So that one, to me, is pretty clear. So the free look is meaning a period of time where you're allowed to look at it for free. It doesn't mean the time period the insurance is free. It just means that at the end of that time period, typically about 30 days, if you want to get a refund, you can. Is it 30 days or 14 days? I think it's 30 days. The free look allows the policy owner a specified number of days following receipt of the policy to look it over. If dissatisfied for any reason, the owner has the right to return it for a full refund of any premiums paid.
It's 10 days.
Oh, it's 10 days. You're right. 100% right. Thank you. Free look is 10 days. Kay has a loan of $5,000 outstanding against her $25,000 traditional whole life policy. If Kay dies, how much will her beneficiaries receive? So now this is basically the same question as earlier. So 25,000, 5,000 outstanding loans, 20,000, 5,000, 25,000, or 30,000.
Hey.
That's right. Any outstanding loans will be deducted from the face amount at the time of claim or from the cash values upon surrender, along with any interest due. The blank provision specifies that an insured must do. Oh, the blank provision specifies what an insured, meaning the client, must do if a policy has lapsed in order to put it back in force. Reconsideration, reinstatement, reissuance, or renewal. So that's called a reinstatement. I'll just tell you guys that. A policy lapse occurs at the expiration of the grace period. The reinstatement provision permits the policy to be put back into force if proof of insurability can be provided and all past due premiums and interest are paid. Any outstanding policy loan may also have to be paid or reassumed. A whole life policy owner elects to use his dividends to pay off the policy sooner than originally planned. Which option allows this to occur? Cash surrender option, paid up option, paid up additions option, or premiums reduction option? I have no idea. I know premium reduction option, pay off the policy sooner, less to use his dividends. I think it's B, but what do you think? Anyone else have a guess?
Maybe D.
You think it's premium reduction option? I just don't remember ever hearing that as a thing, but let's see. Could be. I mean, that's the one that logically makes sense, but I think this is a trick question.
Right.
No, it is the paid up option.
Yeah, okay.
So the paid up option allows you to take the dividends and then pay the policy sooner. So I think that is what that means. And this was just something to throw the word in there to confuse us. So the paid up option is designed so that at a future point, the base policy is fully prepaid. For example, no more premiums are due. In paid up additions, only the additions are paid up, not the base policy. Only a whole life can achieve paid up status. The client purchases a life insurance policy and receives the policy from the insurer 45 days after application. Upon receipt of the policy, the client typically has blank days to review and return the policy to receive a full refund for any reason. And Anuket just told us, Keith, C, 10, that's right. The standard free look or right to examine provision allows the insured to return the policy for any reason within 10 days after policy delivery. Which of the following is not a dividend option? Accumulate at interest, reduce paid up, paid in cash, or paid up additions. Accumulated and reduced paid up. Now, reduced paid up is a settlement option. Is a forfeiture option. So I think all these others are dividend options. So I think it would be B. Yeah, reduced paid up is a non-forfeiture option. The other answer choices are dividend options. So the dividend options are accumulated interest, which means the dividends can accumulate, the interest can accumulate. You can pay out the dividends in cash, or you can use those dividends for paid up additions to pay for life insurance sooner. Taxation applies to any blank on the cash value paid out as a withdrawal of a universal life policy. Taxation applies to any blank. Refund of premium, no. Capital gain, maybe. Dividend, no. Dividends are refunds of premium and they don't, and interest. I believe it's, what do you guys think it is? I think I know what it is. I think it's D. I think interest is taxable. Capital gains are not, I don't believe, in life insurance. It's one of the advantages of life insurance is they can grow tax-free. You can access it income tax-free, and then you can pass it on to the next generation income tax-free. So taxation applies to dividend on the cash value as a withdrawal of a life insurance policy. Let's see. I'm not 100%, but I think. Oh, interest. That's what I said. I chose the wrong one. Anyway, so no. Taxation applies to any interest on the cash value paid out as a withdrawal of a universal life policy. Taxation applies to any interest on the cash value paid out as withdrawal. In other words, any amount paid in excess of the premium is subject to taxation. Let's grade the exam. And so we got an 80%. We squeaked by. Any questions so far? So what did you think of that, Keith? You did really well.
Thank you. It's something I think I'm interested in. I had no idea that I would be, but after this few minutes, it seems quite intriguing. So I think I want to stick with this.
Well, that's fantastic. This is part of so part of our mission at Circle Financial is changing the culture of money in the Black community. And there's things that we're just not taught. Even the basics like how to balance our checkbook. The importance and the value and how to use things like life insurance for generational wealth purposes. The wealthy do this stuff with their eyes closed. But we just don't know it. And so, these are words and concepts that we oftentimes have never heard of before. But if you're interested in money and learning and education and finance and generational wealth creation, these words are just tools to be able to achieve those goals. So, I'm excited to hear that, and we'll definitely talk probably tomorrow. And I'll just give you sort of a little bit of an idea of what it is we're doing. Certainly would love to have you on board. I've got, I think we've got 3 or 4. Do we have 4 licensed reps now? 3 or 4 licensed reps. And then we have a good number who are in the process of getting licensed or thinking about getting licensed. But we're at the beginning stages of this growth. And let me just tell it to you like this: the person who I'm going after, the number one guy at my company, right at the company that I'm partnered with, I should clarify, he made $4 million last year. $4 million. So his son made 1.2 million. And he, just because I'm gonna turn the video off because this is private information.